Good evening, friends. A warm welcome to all. Today, the webinar is on GST compliances in Tax Audit, and in which we are going to cover the following points. Clause 44 of 3 CD, other clauses with GST implication and other GST related precautions. And for this, we have our guest speaker, CA Yash Dhadda. He is having a working experience of over 10 years in the field of indirect taxes. He was a special invited to the Indirect Tax Committee of ICI for the term 2018-19 and 1920. He is also on panel of CII as GST, Service Tax and Excise Advisor for the industry members. He has represented ICI in Regional Advisory Committee, Rajasthan under aegis of Chief Commissioner of Excise and Customs, Jaipur. He is founding core member of study group of ICI on GST research and accreditation matters. He is also a mentor of a pan-India community of indirect tax professionals named GST World. He has written the handbooks on principles of classification for goods and services under GST and also on casual taxable person for IDTC of ICAI. As a patient, he is also engaged in grooming young professionals of CA, CS, and MBA on topics of soft skills and professional life management. And we have with us none other than CA Vivek Khuranaji. He is the founder of CA Sansaar and his name is just enough for the CAs. Now, I would request him to welcome him and give him a welcome address. So, please.
Thank you very much, Stuti. First of all, a warm welcome to all of you on today's very important topic, webinar on the very important topic, GST compliances in the tax audit. And my sincere thanks to CA Strategy for accepting our invitation in very short span of time and for his valuable time. And we are conducting his webinar after a long time, and might be our all the users and the members might missed ESG, but now onwards we'll try to take his time. And regarding today's topic, we have received many messages regarding this clause 44. पता नहीं क्या है इस clause 44 ने? I am not aware of this. I have tried to record many videos like tax audit applicability, then future and option 44AD, 44AD, 44ADA, 44AE. Many videos we have uploaded on the CA Sansaar YouTube channel. But हमारी भी गाड़ी कहीं ना कहीं clause 44 पे रुक गई थी. So thank you यश जी. एंड माइट बी मोस्ट ऑफ द इश्यूज जो मेंबर्स ने भेजे हैं मेरे पास, तो यश जी विल कवर इट. तो आई विल नॉट टेक सो मच टाइम बिकॉज वी हैव वेरी लेस टाइम. सो आई एम जस्ट रिक्वेस्टिंग यश जी to please start the topic. Thank you, Yash ji, once again.
Thank you so much, Vivek ji. Thank you, Stuti ji. First of all, I'll just share my screen. The screen is visible, right?
Yeah, perfect.
Okay,
Yeah.
thank you so much. Okay, so good evening to all the members and participants of this CA Sansaar webinar. As always, I'm thankful to Vivek ji for giving me this wonderful opportunity to be on this dais of CA Sansaar. And I have been here more than 3 or 4 times, and ever since I've been here, there are a lot of love and affection which I've received from this dais. So thank you so much, Vivek ji, and thank you, Stuti ji, for the warm address and welcome. Today's topic, as Vivek ji said, that it looks like what is this GST compliance that needs to be taken care of in income tax. And it looks like that now we have GST coming in income tax compliances also and reporting in that regard. And because as a income tax practitioner, generally one would say that because I am practicing in income tax, I have a good hold over the income tax, I have a good hold over the audit. Why is that? Now I have to understand what is written in GST, what is an exempted supply, what is coming from a registered person and unregistered person, and what is the use of it in income tax. And that is what all of this which I just said is the summation or the summary of reporting in clause 44. And that's why many of us are thinking, let's not report clause 44, let's give a disclaimer, let's put it on the auditee, or is it really required, what is the purpose of it? And that's why probably this clause 44 reporting has kind of become more of a talk of the town. But when we go deep into it, when we realize that what needs to be complied, probably I think by the end of the session, or maybe by now, all of you who would have already started filing or filling 3CD forms, you would have noticed by now that more or less you can comply with the requirement of clause 44 to the extent of 80-85% accurately. And beyond that, one may take a decision or a conscious decision to give a disclosure or not to report. Now, with this topic and with this background, I'll come to the topic where we'll try to touch specifically, predominantly clause 44 and its reporting requirement in 3CD. And then we'll come to the other topics as in when in context of 3CD, GST related compliances plus other precautions, which as an income tax auditor or maybe as an auditor in this peak season of September, which you are required to take care of, not because it is a compliance requirement in GST, but that's because you have a reporting requirement and you are doing an attestation function, and that's why it needs to be taken care of. Before I start, I generally start on a lighter note, and I think this is probably the picture which you would look at, and probably majority of us would be able to relate to it in a sense, to say that all of our clients today, one thing which is very common across India between all the clients and the auditees is that the compliances in India, specifically in context of the taxation compliances, they have increased multifold. And now there is no chance or there is no such instance which is available where I do a slippage, or I remain a non-compliant for a small thing and government would pardon me. And that's why this picture kind of depicts that there is taxman on the left hand side, there is an assessee probably on the right hand side, and taxman has kind of hanged the assessee upside down and still saying, can't you be more efficient and pay more taxes to the government? If we will not put this only in context of paying taxes but in terms of putting compliances, so we realize that there are a lot of regular changes which have taken place across us, be it GST, be it income tax, and the other laws also which needs to be taken care of. Government, the way government has now sitting on the landmine of data which is available with government, be it your AIS system, be it GSTR 2A which is available, be it the other sources of information coming with the government, it's looked like that we need to have an advanced software if we have to really match up with the pace at which government has more information about us. That is, we have to look for automation. And then, as I already said, that there is no scope for any slippage. And moment there is a slippage, moment there is a delay, moment there is a non-compliance or improper reporting, that risk of interest and penalties hanging on my head constantly. And then going forward, we all of us, that one pertinent question which today, standing on 17th or 18th of September, one question which all of us have in our mind but maybe even none of us is speaking is there a possibility of an extension available? Is there a possibility that I get additional time? And specifically when this time, at least our alma mater ICAI has clearly said that they will not represent for any extension, and in fact they have told their members to be relaxed rather than being perplexed. So there, in that context, what can be really done and taken care of? Now, in this background, when one would look at from a chartered accountant's perspective, I think this
Yes,
joke is. Yes,
just
sir.
to interrupt, because rightly you have said regarding the extension. I have also received many messages from last 2-3 days regarding the extension, and every time I ask कि what's the reason? आप बताओ तो सही क्या reason है? Because
Uh,
website is working very smoothly, but
correct,
3-4 times I have not received any reply. But
correct.
today I got a very good reply. Sir, close 44. Then I was speechless. So might be government will listen the members. Yes, yes, yes. Thank you for your reply.
Absolutely. I totally agree, sir. And in fact, to just continue what Vivek ji said, that's why people said, या तो हम clause 44 भर लेते हैं या हम 3CD भर लेते हैं, और 3CD भरना ज़्यादा ज़रूरी है, इसलिए clause 44 नहीं भरते. But I think up to today's session, my endeavor will be that we will say we will file 3CD in a correct manner, and we will also make an endeavor to fill the details of clause 44 to the best of our understanding with utmost accuracy and without putting it lot of time where we would say, if I do not work for 24 hours I won't be able to do it. So we will try to have that balance. But Coming back to this, at least from a CS perspective, now because there is a put of GST in this tax audit, and I think GST ever since it has come in, there are like people who have been asking, this government has made GST very complicated. Some people say government has not made GST complicated, implementation is complicated. And there is a third view which says no, the regular changes have made this everything complicated. But at least all chartered accountant, lawyers, everybody else who are into GST, they think that they're doing something which is very complicated, and that's what this joke says, that I thought my son would I would try and put my son in a relatively easier thing, like for example rocket science or brain surgery, but GST is very complicated. And when somebody would have, in a funnier side, in fact, when somebody has this perspective, that GST is very complicated, suddenly when you put that complicated thing in 3CD, you realize your 3CD has become complicated. And once that things comes in mind, as rightly said by Vivek, somebody would say, "Arey, complicated hai, isliye date बढ़ा दो," which probably may not be the right thing to look from that perspective. Anyways, now before I go to that specific topic, I think one thing which is very clear for all of us to understand is what is the purpose of this tax audit. And I will not touch this on a detailed manner, but I will just put it in a holistic approach, so that when we go to that specific clause of 44 and other clauses, we understand the purpose. Why do we have it? What is the intention of government behind it, and what are we supposed to do? So there are two things which we do basically in this tax audit, which we do under income tax. One is we are assessing the assessee in self-assessing, and because we know that ultimately it is self-assessment which the assessee has to do, so we are assisting him in terms of when we answer that questionnaire which we have in 3CD with a lot of questions which are there, and we punch in the information there when we give our opinion there. So we are kind of helping the assessee to identify whether he has computed the income properly or not. And second, I think, which is the more important side, that side which all of us know but we do not acknowledge it officially, that is we are kind of helping the assessing officer to make the proper assessment of that particular assessee whose 3CD or 3CA 3CP we are filing. And the only thing which we do not do is we do not sign the assessment order. But keeping that aside, everything which is required to be done, we punch that in form 3CD. So that's the major aspect, that we are helping the revenue also in a greater context. And now if you look it from that perspective, you will realize that this clause 44, government is trying to have some additional information for their perspective through 3CD. And where if the assessee is saying, or the tax auditor is saying, I can't give that information, it is giving that government an extra point to think, at least that machine to extra point to think why that assessee is not having the information which we are asking for. How do we punch information or our opinion on anything in 3CD? What do we do? So first of all, as we know, traditionally we are doing, it is one of the important attestation functions which we have been doing ever since the tax audit has been there. Second, we also do a reporting requirement in terms of the information requirement where details could not be explained. So we give that disclosures, we give that disclaimer wherever required, wherever we think that the information which has been asked by the government through 3CD is not available. And third, and the most recent thing which all of us have been doing, and I think is now becoming more important, is that we are making our 3CDs machine readable. And we know that if that whatever information we are punching, whatever lines we are writing, in this era of faceless assessment, in this era where now I do not have to appear before the assessing officer, whatever I am writing in my 3CD, it should be machine readable. It should not be too lesser of the information. It should not be so much of the disclosure that tomorrow it becomes a point for me to have a limited scrutiny. And I think in last 2-3 years, the kind of notices your clients would have received on the basis of what we have punched in our 3CD, you would have realized that if your 3CD is not machine readable, if it is not equipped in that manner, then there can be certain challenge in that particular perspective. Then what do? We do two types of things in 3CD. First, we compile a lot of information and data. Like for example, we give those dates of what is the date of payment of ESIPA, what is the amount of depreciation, what are those payments which have been made under section 43V which are allowed as an expenses. So in one part of 3CD is such where we only compile information and we punch the information and we submit it before the government as asked for. There is another part in 3CD where we have to give our opinion. So it's not like that in everything which we are punching in 3CD is opinion. It is also not like that whatever we are punching in 3CD is only information. It is a combination of both. We also give opinion, like for example, compliance of ICDS, that amount which are not credited in 40A IA, whether they need to be disallowed, not allowed, exempted income, and against that whether expenses have been allowed. So all these are opinion based. This is discretion based. This is based on the professional expertise of the person who is auditing it. Whereas on the left hand side is generic information which is very standard in nature. Now, in this background, when we come to 44 and we try to analyze whether 44 is information based, is it like only giving the information, or is it also expressing an opinion? I think all of us would agree that it is only information which we are giving to the government. So it's like compiling the information as being asked for in 44 and submitting to the government. There is nothing of that sort where I have to give certain opinion in respect of the table which has been asked for reporting in clause 44. I'm compiling information there. And all of us know that compilation of information is dependent upon how auditee has maintained his books of account. If he has maintained it properly, if his software is able to give that particular data to me, I would be able to punch that in the respective clauses of 40 of 3CD. If he has not maintained that, then obviously I am going to have challenge in not reporting, and that's where I will try and look out whether I can give a disclosure, whether I can give a disclaimer. Should I punch information or should I not punch the information? Okay. Before going to the exact table, somebody may have a doubt, and the doubt can arise rightly. What is the background of this 44? When did this come? Is this applicable from this year? Is this not applicable from this year? And I think answer to that all of us know, but just to bring everybody on the common platform. So this clause 44 of Form 3CD, it was initially introduced through notification 30 bar 2018, and it was supposed to come from July 2018. That is to be applicable from, in fact, not to from July 18, but from August 2018. And for all assessment year, 1819 compliance or 3CD which was to be filed, we were supposed to punch the information as being asked in clause 44 at that point. But due to regular representations, due to COVID period, that it was extended time and again. In fact, not only this clause 44, but one more clause regarding GAR transaction, that is an anti-abuse provision. So that clause 30C and 44, which have been made applicable this year, they came together. They were given extension repeatedly for 3 years, and finally the last notification which we had, which gave the extension, that came in through this circular 5 oblique 2021, where it said no reporting requirement is to be done up to March 2022. So one slight doubt which cropped up in everybody's mind was when the last circular which was issued said March 22. Does that mean that for financial year 21-22 I'm not required to do the reporting? And that's where probably one set of schools thought for assessment year 22-23 or financial year 21-22 I'm not required to do the reporting. But when you would look at the manner in which this circular 5 oblique 21 is written, that was about the extension which came for the last time, and you read the first circular which came in 2018 for extending the reporting requirements in clause 44 for the first time. When you will read them both, you will realize that circular 6 oblique 2018 was very clear, and they said when we mean that we are extending the time for reporting, that it means that all the 3CDs which will be filed after this particular date, they need to be compliant with this compliance of rule, this clause 44. And that is why it is very clear and evident that that all the tax audit reports which are required to be filed after 31st of March 2022, on all those tax audit reports, statutorily there is a reporting requirement in respect of clause 44, that is information of GST in the tax audit report, and also in respect of GAR provision under clause 30C, if that is also applicable on that particular auditee. So at least in terms of reading of this circulars and the relevant notification, it is quite clear that it needs to be reported for all the tax audit reports to be filed after 31st of March 2022. Now, having said that, if one thought of school which is saying, and the indication which Vivek ji also gave, that is people are saying this clause 44, what kind of bala is this? Kya bala hai ye? तो बहुत सारे आर्ग्यूमेंट है which may be put forward by all those people who find it very complicated, and they may say assessee को ज्यादा समय नहीं दिया गया. So that argument is now nullified because everybody knew since 2021 that after March 22 all the tax audit reports which will be filed, this reporting has to be done. So assessee had sufficient amount of time. Then auditor can say that assessee did not give the information. That probably then you're casting the onus upon the assessee to say that you did not give the information. So whatever repercussions would come, assessee would be responsible for it. And probably as an auditor, all of us understand we would not want that. We would always want the assessee to comply. Third, probably the one strong argument which was there in 2018 when this first time this clause came in is that GST is very new to India. अभी तो एक साल ही हुआ है GST आए हुए and nobody understands GST. Well, whether we understand GST today or not is again a subject matter of debate altogether separately. But at least in terms of time, now GST is 5 years old. So at least in terms of compliances, the general understanding is that basic terms in GST are clear to everybody. People have been filing returns on a monthly basis since last 5 years, and one cannot take an argument by saying that basic things in GST are still not clear. And last probably is that argument for which you cannot have an answer. That is to say, what is government going to do with this information in respect of GST in the income tax collection? It will not increase the income tax collection, so it hardly matters if I do not report it. But I don't think that is the correct approach to look at it, because if there is a reporting requirement under income tax, you have to honor that, you have to comply to it, because again, as an auditor, when you are certifying you are basically giving an opinion on the books of account. You are saying it is true and fair, and additional information whatever being asked for on the basis of that books of account, assessee has maintained or assessee has not maintained. Now we come to clause 44 of the 3CD. I'm sure all of us have seen that time and again. You would have internally discussed that in your offices, you would have discussed that with your clients, you would have told your clients what needs to be done. But when you look at clause 44, you realize that it has 7 columns. Those 7 columns are very clear. It says that you have to put the total expenditure which you have incurred in a year, and then you have to bifurcate that expenditure in a year in 2 parts, that is expenditure in respect of entities registered in GST and expenditure relating to entities which are not registered in GST. And then in respect of expenditure incurred from the entities which are registered in GST, you have to further bifurcate into 3 parts, that is coming from a composition person, coming from a person supplying exempted supplies, and leftover supplies from registered person. And that's what basically this information is being asked for. So sum and substance, your total expenditure in your profit and loss account and balance sheet, if you may call it as an expenditure or whatever you call as an expenditure, you bifurcate that on the basis of whether coming from a registered or an unregistered person under GST. So look at the supplier if he's registered in GST or unregistered in GST. Look at it whether that expenditure qualifies to be reported in GST somewhere, and on that basis you punch the information here. So it is very clear that is either you will punch the information or you will not punch the information. There is no space here to give an opinion in this regard. Now, before we go to the compliance, what needs to be complied and how will you comply? Maybe for all those people who are at the outset thinking, no, we do not want to comply, that information is very complicated and we do not want to do that, then the next question will come is clearly you would have to give a disclaimer. So how will you give the disclaimer? So there are 3-4 ways in which you may give the disclaimer. One is you may say that assessee has not maintained, and because according to the assessee he do not have a disclosure of this sort which is required in clause 44 under the provisions of GST Act, and because it is not there, that's why assessee has not maintained that information. And because assessee has not maintained that information, we cannot basically punch that information in clause 44, and that's why we are giving this disclaimer. Second can be then you can say that the accounting software which is being used by the assessee, it is not equipped enough or it is not structured in a manner to give the bifurcation of the total expenditure in terms of coming from a registered supplier under GST or an unregistered supplier under GST, and that is why you are not compiling the information. Third can be that because the information which is being expected is new and the accuracy of it cannot be verified by you, that's why you're abstaining from giving that information. Now, in all these three, basically, we are putting the onus on the assessee to say that either he has said that he is not required to report under GST, or he has not, or his software has not maintained the same. Again, before we go on to that, whether you can do this or not do this, if let's say for the instance you have decided to give a disclaimer like this, first question which probably would come in procedurally before all of these people is, where are you going to report it? So just like we have certain clauses in 3CD where you have space available to write your disclaimer, where you can specifically mention that this clause information has not been reported for whatever reason. Like we have 21D in respect of this account pay checks, we have 27B in respect of prior period items, we have this for ICD disclosures. There is nothing of that sort which is available in clause 44. And that is why one answer for all these people who are planning to give a disclaimer is, you have no other place available except your form 3CA or 3CB, that is your tax audit report, where you have a space for observations available, and there you write it down that you have not purposefully punched the information in clause 44 for whatever reasons we just discussed. So at least for all those people at the outset who are saying they will not give, first thing which would come is, where will you write it? And the only place where you can write it is your from 3CA or 3CB. But having said that, before going into that area or territory, it is very important we, for a timing, we jump to the provisions of GST, and we really look into the provisions of GST, that whether assessee is not required to statutorily maintain this kind of information or not. Because if one is saying that अरे GST में कहाँ लिखा है कि आपको expenses को किस तरीके से maintain करने की जरूरत है, and because it is not written clearly, and that's why I will not give information in GST, then to answer to that question is, let's try and look at the provision of GST. So let's look at section 35 under the provision of CGST Act or respective state goods and services tax act. There section 35 says accounts and other records, and it says that every registered person, so it is very clear that if your auditee is registered under GST, if your client for whose tax audit you are doing, and if it is registered under GST, he shall keep and maintain certain kind of records which are maintained in section 35. What is that which is mentioned? You look at 35(1)(b), inward and outward supply of goods or services of both. So he has to maintain the true and correct account of inward and outward supplies of goods maintained, and such other particulars as may be prescribed as mentioned in clause F. Okay. Now, what is prescribed? So we have to go to rules. So let's come to CGST rules or SGST rules, and we have rule 56. Rule 56 in the CGST or respective state GST rules, it says maintenance of accounts by a registered person. And 56(1) says that every registered person shall maintain true and correct account of goods or services imported, supplies attracting payment of tax and reverse charge. So that comes very clearly. If I'm importing any goods, I'm importing any service, and I'm registered in GST, Rule 56 sub rule 1 says I have to maintain that true and correct account of those details. Now it is also very clear that if I'm importing any goods and services under GST, that means my supplier is unregistered under GST. That means for my table number 7 in clause 44, and I'm hoping that all of you have table numbers available in front of you so that you can easily correlate to what we are discussing. So table number 7, which talks about details in respect of unregistered person, at least rule 56 under GST says you need to maintain true and correct account of those details, and if that is available, you have a ready data available at least in terms of import of goods and services as per rule 56 sub rule 1. 56 sub rule 1 also says you need to have true and correct account of supplies attracting payment under reverse charge. Reverse charge means where I am as a recipient paying tax directly to the government. So wherever your auditee is paying tax to the government directly under GST, again under 56 he has to maintain true and correct details. So whether he has received any supplies on which supplier may be registered in GST, but supplier would not pay tax and I will pay tax under reverse charge, I have to maintain details of it. So that means rule 56(1) is mandating me to say, if I am receiving any supplies from a registered supplier on which I am paying tax under reverse charge, I have to maintain detail. If I am receiving any supplies from a supplier who is unregistered under GST and I have to pay tax under reverse charge, again I have to maintain the detail. तो 56(1) again ये दोनों चीजों के लिए is very clear. Then we have 56 sub rule 5. I'm not going into 4 deliberately, I'll come into 5. 5 says every registered person shall keep the particulars of. What are the particulars? Name and complete address of the suppliers from whom he has received the goods or services chargeable to tax under this act. So now, what are those services or goods which are chargeable to tax under this act? They are only chargeable to tax when you receive them from a registered person. That's a condition. Or from a person who is registered or liable to be registered. For the time being, let's say I'm assuming जिसका आप ऑडिट कर रहे हैं, the person whose books of account you're auditing, in that case that person is and he is registered in GST, he is compulsorily required to maintain the name and addresses of all those suppliers who are making a supply to him which are taxable under GST, which are chargeable to tax. They may be exempted supplies, mind you, but still they are chargeable to tax under GST. Means he has to maintain details of all names and addresses of the suppliers who are supplying exempted supplies, who are giving me taxable supplies, who are giving me supplies under a composition person. And I cannot say that there is no requirement under GST to have to maintain this record. And now what happens if I do not comply with these provisions under GST? Forget income tax. First of all, what is the non-compliance if I do not follow these provisions? 35 subsection 6 of the GST says if I do not do this and department GST officers tomorrow find it out that I have not maintained proper records, they can go ahead and look to it from a perspective that whether my best judgment assessment can be done, whether they can say that I have improperly maintained the records, and can they say I have made certain supplies which is not recorded because I have not maintained the details properly as mentioned in rule or section. If not that, there is section 125 which says there can be general penalty if there is no specific penalty available. That can be 25,000 rupees under CGST, 25,000 rupees under SGST, making it 50,000 rupees. There can be third penalty. Let's say somebody would say, there is a specific penalty. Okay, let's not go to general penalty. There can be specific penalty. 122(1), which says taxable person. So now it says a person who is registered or can be liable to be registered or registered, but who fails to maintain, keep or retain books of account and other documents in accordance with the provisions of the act or rules made thereunder, then whatever tax is evaded, he may pay that or 10,000 rupees, whichever is higher. So at least 10,000 rupees penalty under CGST and 10,000 rupees penalty under SGST is leviable. Meaning thereby, if somebody is saying that there is no provision under GST to maintain such records, I'm afraid that is not the correct statement in that light. If that person is registered in GST, he has to compulsorily maintain the records, at least 90% of the record which is being asked for, and to be very specific, in my humble understanding, all 100% of the details which are required in clause 44. And if he's not doing that, theoretically he's attracting penal provisions under section 122(1) or 125, as the case may be, depending upon how officer would like to approach in that particular context. Now, somebody would say, "Arey, ye GST की penalty है, उसका हमको से क्या लेना देना?" Or maybe you will have a question which may be a valid question. My auditee is not registered in GST. He is only giving exempted supplies. Or he is giving the supplies which do not come under GST at all. That means then I am not required to fulfill the requirements of clause 44. Again, to my understanding, that would not be a correct answer, for a simple reason that once you are attesting the books of account of that person is saying true and correct, and you have a disclosure requirement form 3CD as an auditor, that means certain information government has deliberately asked for, and clause 44 nowhere says that the detail needs to be filled only if the auditee is registered in GST. So even if your assessee whose books of account you're auditing or whose 3CD you're filing, even if it is not registered in GST, does not matter. Still, as per clause 44, he is required to submit the information. That's my understanding. Now, having said that, now at least what I believe, there is a reporting requirement under GST. Even if there is no bookkeeping requirement under GST in that regard, if not maintained or if assessee is not registered in GST, still clause 44 does not exempt all those people who do not have a registration under GST, And hence now it becomes important to read what is mentioned in clause 44. So we have 7 columns, as I already said. Total expenditure divided into 2 parts, coming from a registered supplier under GST, coming from an unregistered supplier under GST, and then registered supplier under GST we are dividing into 3 parts: supplier under composition scheme, supplier making exempt supplies, and rest of the supplies made by the registered person. Okay, 2-3 questions at the outset which will come specifically. Do I have to give information total expenditure, that is one line item, or I have to give information headwise कि मुझे टेलीफोन अलग लिखना है, बैंक चार्जेस अलग लिखना है, परचेजेस अलग लिखना है? You have to punch that all of them together as one line item. All those who have already seen the 3CD, you know the answer, that you can't bifurcate. There is no space available in the utility given by the income tax department in the 3CD, and you have to punch the information in one single line. Your working paper can have information headwise, but in the 3CD which will be uploaded and the information where it will go as one single line. So total of your expenditure will come, total of such expense coming from the registered GST supplier or unregistered GST supplier would come. That's point number 1. Now, second, when we talk about total expenditure or headwise, what is the main meaning of expenditure? It will include purchases. Clearly, in that sense, it will include purchases also, because we treat that as part of the expenditure. So there, the next question comes, when we talk about total expenditure, do we have to exclude certain things? And there, these kind of questions could come. Do I have to exclude the provisions? So our understanding says that yes, you have to exclude the provisions, because provision is an estimate of the liability which you understand may arise on a future date, and on the basis of principle of conservatism and accounting standard you're providing for in the books of account, but it may not be the actual expenditure that has been incurred. And that is why even if a profit and loss account may include certain provisions, like example provision for bad debt, provision for outstanding expenses and all those things, but still it will not form part of a total expenditure in column number 2 of clause 44. Whether it will include purchases, yes, definitely it will include purchases, because purchase is a revenue expenditure, and the table talks about total expenditure. Third question which comes is whether it will include assets, and the answer is that yes, it will include assets, the purchase of assets during the year, because asset is a capital expenditure, and clause 44 does not bifurcate between a revenue expenditure and a capital expenditure. It includes both, and that is why it will include your purchases, it will include your regular expenses, and it will include your purchase of assets also. Next, whether it will include bad debts. Now that's a very interesting question, because bad debt, it is not an actually provision, but it's an actual loss which has happened. But the answer to that is because you're punching information in context of GST, and bad debt is actually not a supply of goods or a service to me, but it's a kind of a loss which has happened to me. That is why we will not include the bad debt. So bad debts we are not including because it is neither a supply of goods nor a supply of service, which is a primary condition under GST to basically see whether it is leviable in any sort for the purpose of taxability. Now, having said that, now we come further. Let's look at, we have total expenditure. We have decided the total expenditure. In that total expenditure, we have seen what needs to be included and what need not be included. Once we have decided what will come in my total expenditure, I will now bifurcate that into various parts. And first is the all those supplies which are coming from a supplier who is registered into composition scheme. Now, according to me, friends, this is that part of the table which is the most tricky part. Why tricky? Because probably this is that information on a practical front which majority of your clients would not have maintained, because it does not lead to any revenue addition either on the GST front or on the income tax front. So extracting of information in respect of composition supplier may be a difficult situation. But before we go on to that, I think first, for all those people who really do not practice under GST, what is a composition scheme? So we have all those suppliers under GST who are registered, but who do not charge tax on their invoices. They are under a certain scheme because they have a small turnover, and because they have a small turnover, that is why government has given them a facility to pay tax on a lump sum basis with a certain restriction. Like for example, all those suppliers will not make any interstate supply. A supplier sitting in Maharashtra cannot send goods or services to somebody who's sitting in Gujarat, so they can't make an interstate supply. They cannot charge tax on their invoice. All their invoice should carry a line which is composition taxable person not eligible to collect taxes on the supplies. Then there are certain suppliers who cannot go into composition scheme. So if your client basically whose books of account you're auditing, and he has certain kinds of inward supplies, like for example inward supply of ice cream coming from a manufacturer of an ice cream, or pan masala or tobacco, or maybe all those people who are also dealing in supply of non GST goods, like for example petrol pump dealers, or diesel supplier, or natural gas or alcohol supplier, all of them can never go under a composition scheme. So except all these suppliers, if your client is buying any goods or services from a supplier who is under a composition scheme, that detail has to be punched separately in clause 44 in column number 3. I think, if I understand correctly, that is column number 4, not 3, column number 4. They have to punch the details in column number 4 separately. However, because this composition detail is not readily kept by the assessee, because they do not have their GST number doesn't look different. They have a regular GST number, they will have a regular GST number, but only that they will have a permission for composition. So I understand this information would be little difficult to take out easily from the books of account of the assessee. One may say, is there any possibility to find information from GSTR 3B? Well, answer is yes. The monthly GST return which we file, we have a specific table number 5, where if I have purchased any goods from a person who is registered under a composition scheme, or if I have received any supplies which are exempted under GST, which is also one of our reporting requirements in column number 3, I have to report that on a monthly basis in my table number 5 or GSTR 3B. So theoretically, there is a source of information available through GST returns. Practically, what I understand, 90% people do not punch the information in table number 5. And that is why, at least for this column number 4 of composition supplies, what I understand is that auditor in majority cases will be forced to put a disclaimer that because that information has not been maintained by the assessee, and there is no credible source on the basis of which this information can be compiled, that the services or goods which have been received from a composition person, that's why they are not punching the information in this regard in clause 44. There is one alternate question which also comes regularly, that is, let's say I have received supply from a person who is under a composition scheme, but I have not recorded his GST number in my books of account, because it hardly matters to me if he's registered in composition or not registered in composition, or not registered in GST at all, because he's not charging any GST from me. So can I punch the details of all the expenditure which I have done from this supplier in column number 7 of clause 44, that is details from an unregistered person? Well, to my mind, friends, that may not be the correct reporting, because if assessee gives me a disclosure clearly by saying that is coming from an unregistered person, then only I should make an endeavor to punch that information in column 7 coming from an unregistered person. Otherwise, to my mind, this information may not be very easily to compile, and that's why one may go ahead for column number 4 from composition person and give a disclaimer in that regard that information is not available. Okay. Uh, in fact, our ICI guidance note also kind of similar talks about a similar thing, where they say that if the information is not available separately, assessee, the auditor can write they are unable to comment because assessee has not maintained the data coming from a composition portion. Coming to the next column, that is column number 3, that is supplies from coming from a registered person but making an exempt supply, that is not that supply which is exempted under GST. There, in that case, it is very important to first of all understand what are exempt supplies, because it is that area for all those people who do not practice in GST. They might have a lot of supplies coming in their way and they may feel this is exempted. Well, the fact of the matter is some of them may not be supplies under GST at all, and you're not required to make the reporting. So first of all, what is an exempt supply under GST? We have a definition under section 2 subsection 47 of the CGST or SGST Act. It says exempt supply means supply of any goods or services or both which attracts nil rate of tax or which may be wholly exempt from tax under the IGST Act and includes non-taxable supplies. So 3. 1. All those supplies which are nil rated, where they have a rate of tax, but that rate of tax is nil. Second, all the supplies which may not be nil rated, but they may be 5, 12, 18, 28 or whatever, but by virtue of a notification, government has exempted it, and that's why they are called as exempted supply. Or third, all those supplies which are not taxable, which are beyond the levy, but for the purpose of definition of exempted supply, government has deliberately included that in the definition of exempted supply. So three types of supplies: nil rated, that is having nil rate of tax, coming through a notification as an exempt supply, or third, which is a non-GST supply or non-taxable supply outside the levy, but coming through the definition of exempt supply by virtue of the notification. If somebody has to say what are these notifications under GST, you may note down two notifications: 2/2017 of the central tax rate and 12/2017 of the central tax rate, and both of them are dated 28th of June 2017. These are the master notifications for the exempted supplies, and they have been updated on a regular basis by the government. So whatever changes you see, they come on these in these two notifications only. Now, what is a non-taxable supply? Because that would come as a question. So alcoholic liquor for human consumption, supplier of petrol, high-speed diesel, motor spirit, natural gas, aviation turbine fuel, all of them are non-taxable supplies, and for the purpose of GST, we treat them as exempted supplies. That means if I'm buying any petrol, if there is any fuel expense in my expense side, if there is any diesel expense in my expense side, if there is buying of any kerosene in that regard, all of them will come as an exempt supply. And 99% of the petrol pump and petrol pump dealers from where we buy this fuel, they are registered in GST. So that means the information in respect of this buying of fuel expenses, they are from a registered person, and they will form part of column number 3 of clause 44. That is very clear. One can do that without going into the nitty-gritties of such details, because all of them almost are registered under GST. But they are exempted supplies. Now there are certain types of supplies on which no GST is payable, and that's why sometimes we get confused whether they are exempted, non-taxable, or whatnot. So there are certain types of transactions, we call them Schedule 3 transactions under GST, and these are those activities by virtue of the provision of the Act, they are treated neither as supply of goods nor as supply of service. So interestingly, they are even not non-taxable supplies. They are no supplies. They are not supplies at all. So mind you find there is slight difference between the non-taxable supplies and no supplies. No supplies are those which are not supplies at all for the purpose of GST, and hence we even do not qualify them as non-taxable supplies. So for example, sale of land. For example, if I am purchasing any land, I am purchasing any completed building, I am paying any salary to my employees, I am making any high seas purchase, I am doing any drop shipment purchases, I am basically buying goods within a custom bonded warehouse. All these things together, they are treated as no supplies, and according to ICAI's guidance note, they will not be required to be reported in clause 44. That is why salary payments which we do, all salary expenses to the employees, they will not be reported in clause 44. Any land which I am buying from a registered person or an unregistered person, that will not be reported in clause 44. Any building which I am buying from a registered person, which is a completed building, or from an unregistered person, it will not be reported in clause 44. It will neither form part of my total expenditure, nor it will go into any of the subclauses which we just discussed. So that's a huge relief. You can clearly exclude salary. You can clearly exclude this land transactions, building transactions, immovable property transactions, any high seas purchase. If somebody does, all of them can be excluded for the purpose of computation of clause 44. What is left over is from the expenses which are coming from the registered entities. That are all those entities which are registered. They are not registered as a composition dealer. They are not giving me any exempted supplies. All of that become part of my column number 5. And this is that column number 5 where there is a slight possibility that I might have put certain details which I was not required to punch. And here, probably as an auditor, we will have to put our expertise to see how information has been complied and together by the assessee. Why am I saying that is, take a very simple example. Let's say your client is a manufacturer whose audit you are doing, okay, or you're filing 3CD for him. He has, let's say, taken a service of a rent a cab operator or a taxi service. On the taxi operator has charged for taxi charges, along with it has charged GST at the rate of 5% or 12%, as the case may be. Now, what happens in common parlance is that there are certain input tax credit, any tax which have been charged to me, certain supplies on which I can't claim any input credit. It is called as a block credit. That credit whose benefit I can't claim under GST. We call it as a block credit. Now, because it is a block credit, what happens? I do not book the GST of it separately and I make it part of my expense. So if let's say I've incurred an expense of 100 rupees of taxi and 10 rupees of GST, 110 I will punch that in my profit and loss account and I will not book GST separately. Now, a question will come where these details will be there. Now, if I look at my books of account will not be able to tell me that this is coming from a registered person unless somebody goes, finds an invoice, because I've not tagged in my books of accounts like that ways. But in reality, apart from all those supplies on which I am claiming input tax credit, I can only claim input tax credit if my supplier is registered and it is charging GST from me. So all that expense, which I'm putting that in my profit and loss account or I'm putting in my balance sheet as a purchase of asset, apart from that, this block credit is one more addition in my GST records, which is coming from a registered person of whose details may not be available with me very easily. And that is where auditor has to guide the auditee to say that include all the block credit details in your column number 5 also. Because if you do that, then your column number 5 would be able to give you the correct details. Okay. Now, so this is 3, 4, 5. Next question which comes is column number 6 says total payment made to registered suppliers. So does that mean what is the total amount of payment which has been made that will come here? And answer is no, it will not be actual payment, but it is summation of what I am writing in column number 3, 4, and 5. In fact, the utility of government is also like this. So I do not have to really worry about my column number 6 because whatever I am putting in column number 3, 4, 5, automatically the total of it will go into column number 6. I do not have to really find out what are the actual payments which I made to all these suppliers. So that question I can just put away from my mind. Column number 6 is an auto total column and I can ignore it to that particular extent. Now, before going to column 7, let's stick to this column 3, 4, 5 only. And some issues which we can pick up for our understanding is that in column number 5, there are certain supplies for which we have to, how can we punch we can get the information, because the practical understanding of this session would be that probably once we understand what will come in which column, how am I going to find that information? And answer is very simple if you ask me. For all the things on which I have claimed input tax credit, it will come in my column number 5. So all that inward supply of goods, services, assets, whatever I am claiming input tax credit, that amount of basic expense or asset, whatever will come in column number 5. Apart from that, all the inward supplies on which I'm not entitled to take the credit and it's a block credit, it will come in my column number 5. We call them at 17.5 block credits. So where will I find that? For that, I will have to refer to my GSTR 2A, or there is one table in GSTR 3B which is called table 4D. From table 4D, I can find out the amount of a block credit and on that basis, I can find out the amount of expense and I can put that in column number 5. From GSTR 2A, whatever credit appearing in my 2A, I have not claimed in my GSTR 3B. From supplier detail, I can find out if I booked an expense. If I booked an expense, that becomes my block credit. Second, very important, reverse charge supplies. All those supplies on which I am paying tax under reverse charge, but my supplier is registered in GST. In that case, again, I can go to GSTR 2A, look at it from a GSTR 2A, look at the tagging which says RCM yes. So GSTR 2, we will come to what is GSTR 2A in a while, but you can just remember for the time being what is GSTR 2A. So I go to GSTR 2A, look at the tagging, That tagging of GSTR 2A will say RCM yes, and all those RCM on which I have paid tax to the government and I have claimed the credit, or I might not have claimed the credit, doesn't matter. All of that will come from a registered supplier. And third, for exempted and composition, I already said you have table number 5 of GSTR 3B. If that information is not available, probably you can put a disclaimer. Last is the most ticklish part or more difficult part, that part for which maybe an auditing will be required. That let's say my auditee has received an expense for purchase of food items. Let's say there is an office party which has happened and they have purchased a food item. In that case, on purchase of food item, let's say assessee would have paid tax on that food item along with 5% GST whose credit is not available, and the supplier would not have input my GST number because nobody gave him my GST number. I will claim it as an expense under income tax. I will make it part of a books of account. It will have GST on it. It is coming from a registered person, but neither my books can tell me nor my GST or 2A can tell me, and only vouching of those expenses can tell me it is coming from a registered person or an unregistered person. And I think this is that part where information would not be readily available, and for these kind of expenses one is forced to give a disclaimer that assessee has not maintained that information where his GST number was not mentioned in his books of account, but still expense was claimed by that particular assessee in his books of account. So these are four types of basically types of those inward supplies or expenses where there can be that extracting of information can be a challenge, but that challenge can be overcome if you look at these evidences coming from the GST returns. We have table number 7 in clause 44, that is the last table, which says whatever is not coming from registered is coming from an unregistered person. So one view is whatever you have punched in 3, 4, 5, the total of that is coming in table number 6. If whatever is left over after 2 minus 6, you punch that in table number 7. But mind you friends, you should not have over reporting in table number 7. Why you should not have over reporting in table number 7? For a very simple reason that if let's say my business says that I have 50-60% purchases from an unregistered person, then either my nature of business should be such, like for example I'm dealing in vegetables, I'm dealing in agriculture produce, I'm dealing in a mandi where all the suppliers, primary suppliers, are farmers who are not registered in GST, then it is justified. But I am a manufacturer and I am saying majority of my purchases are coming from an unregistered person. There I am giving an additional point to the income tax department to go after the scrutiny of my books of account. Number two, you look at the provisions of that that TDS which is there in income tax. If you buy anything from an unregistered person or a registered person, then you have to deduct this TDS of 10 crores and whatnot. So then again, you're giving an opening to the department to say if I have a high amount of unregistered purchases, how I have taken care of my TDS compliances. That is one part which is going to be very interesting, and that is why one assessee can auditor can take a declaration from the assessee that wherever GSTN has not been punched from the books of account, assessee has treated them as supplies coming from an unregistered person, and that is why information has been punched in table number 7. So that kind of declaration can be taken from the assessee, and on the basis of that declaration in management representation letter, auditor can take a safe view of punching all those details in table number 7. Lastly, coming to in this regard, how can I take all this information? What is the source of that information? Can I have any government document which can help me to prepare this information? And I think answer to all these things is one document, that is GSTR 2A. All those who only practice in income tax, as you're familiar with form 26AS, where my recipient deducts my TDS, and as a person who's earning the income, that income amount along with TDS is reflected. In a similar manner, GSTR 2A is reverse of it. My supplier of goods and services, whatever tax he is charging from me, he will put that on the invoice. I will punch on the GSTR 1 and it will appear in my GSTR 2A, of which I will claim as an expenditure. So details of those expenditures are coming in my GSTR 2A, which is coming from a registered person. I can take it as a base, reconcile that with my books of account, and whatever is left over, which is a GST transaction, I can put that coming from an unregistered person. So GSTR 2A and reconciliation of it, which people do on a monthly basis because it is a statutory compliance in GST, can be a base document. On the basis of this, clause 44 details can be really punched in the books of account. Coming to 3 or 4 questions, because I believe these questions are a very regular question. First, expenditure will include a capital nature of expenditure. I have already given the answer that yes, it will include capital nature of expenditure, and that is why all the details of capital nature you will be required to punch here along with the revenue expenditure. Second is, how are we going to do the reporting, exclusive of tax or inclusive of tax? And I think the answer will be depending upon how do you maintain your books of account. If in your books of account you maintain the tax separately and you only take the amount of expense in your books, in your profit and loss account, and you book the amount of assets separately, then obviously you will only book the base amount in clause 44. You will not include the tax amount in that regard. Next question, whether clause 44 will also include depreciation, amortization and provision of expenses. We have already discussed depreciation, amortization are only provisions, they are not actual expenditure, and that is why they will not be included here. Next is, how is reporting to be done in clause 44? Whether it has to be GST invoice. If let's say I have multiple GST number on my PAN, so I'm going to have only one 3CD. In that case, I have to punch details each GST invoice, or I have to punch the detail in one single line item. The answer is there will be only one single line item, accumulation of all GST together, and it cannot be a separate line item because that facility is not available, at least in the utility which is given by the government. Next, one of the suggestions which has been given by ICI in the guidance note is that you can get information from the client in this particular kind of a format. You can give this format to the client and ask the client to give the information in this format for the purpose of clause 44. And whatever information you receive in this format, on that basis, you can proceed to file the details in clause 44. Well, friends, if you look at it, this checklist very closely, you will realize Institute has kind of replicated what is mentioned in GSTR 2A. Only with one addition, they have added to the extreme left expenditure head. So in GSTR 2A, all other details which you see on your screen, they are any which way available in GSTR 2A. One more addition which Institute has done is you ask your assessee to actually download GSTR 2A, and then again that GSTR 2A punch the expenditure head in which expenditure they have punched it, and on that basis at least information from a registered person can be taken very easily. Obviously, tax auditor as its responsibility should verify the information, test check the information, and they find the information correct, then on this basis they can go and proceed the details in clause 44. Institute has suggested one more thing, that two disclosures which should always be given along with 3CD, even if when you're filing or punching the information in clause 44 is, how have you interpreted the meaning of word of total expenditure? What are you including and what are you not including as a matter of policy? And second, what method you have followed to fill the appropriate columns, as in how have you treated information in column 7? What have you tried to include in the information of an exempted supply? What have you excluded from the information of not to be included in exempted supply? If it is a case where assessee is not a compliant assessee, not having proper books of account, that discipline on the books of account is not proper, then in that case, Institute has suggested that you should go ahead as an auditor and put a disclaimer or a disclosure that the information cannot be compliant because assessee did not maintain books of account in that manner. But I think up till now, whatever we have discussed, you would have understood that information is any which way available through GSTR 2A, through the ITC registers, and otherwise. And not giving the information probably would clearly say that the books of account of the assessee are not of that quality which should be expected, and that's why it may give an additional point for the purpose of scrutiny in this regard. Now, what we have done is we have basically tried to all this information which we discussed theoretically up till now, we have tried to put that in an illustration to see to it that how it will appear in clause 44, where let's say we have taken some fictitious numbers and see that how will you, where will you put that in clause 44? You will put them, you will not put them. We will quickly run through this slide, and I will not ask the questions because that would not be appropriate on the platform, but I will give you my understanding to say that basically how are we looking at it. First thing, total expenditure of an entity debited to profit and loss account is 250 lakhs per se. Now the first question, That means, are we starting with 250 lakhs? And the answer is absolutely no. So that's the first very important point to understand. Don't look at the debit side of a profit and loss account to say whatever is coming as my total expense, I will take that as a base. No, you're not required to take that as a base. In fact, when you look at my answer, what is coming in the table, you look at it, that first 2 lakh 250 was coming as my total expense. I have considered 228 out of it only in the table, but the total of my table clause 44 is coming as 253, and you realize three separate figures. 250 was total of my debit side. Out of that, only 228 according to me was considerable for the purpose of clause 44, but still total of my clause 44 is more than 250, 253, for an obvious reason that it has certain purchases of assets which are part of it and certain expenses which are not part of it, and that is why there is a difference here. Okay, so first thing, do not look at only at the debit side of profit and loss account, that is total side, but look at each and every expense you're punching that in each headwise. You have to look at it, whether you have to include it or whether you don't have to include it. So let's go first. Purchases made from a composition dealer, 5 lakhs. It's a hypothetical situation that you have information available from purchases made from a composition person. Then in that case, this 5, it will come in my column number 2, and this 5 will come in my column number 4 also. Next, total expenditure incurred on exempt supplies, 5 lakh from registered entities and 15 lakh from unregistered entities. In that case, it becomes 20. So 20 is coming 5 lakh from registered entities and 15 coming from an unregistered entity. So let's say I have purchased any goods. Let's say I have purchased vegetables which are exempted from GST. So let's say 5 lakhs worth of vegetables I've purchased from a registered person and 15 lakhs I've purchased from an unregistered person. And that's why this 15 is coming here and 5 is coming here. So basically, I am going into that particular head of account, looking at it, whether it is taxable or exempted under GST. If it is exempted, then I'm bifurcating it, whether it is coming from a registered person or an unregistered person. Okay. Then total security service expenditure under RCM, and for security services we pay tax GST under reverse charge. And let's say the supplier who is given the security service was not registered in GST. So I might be paying tax to the government on this, but the supplier is unregistered. And that is why security 5 will come here and 5 will not come anywhere here, but 5 will come from an unregistered person. That is 5 will come here. So mind you friends, on this 5, I will pay tax to the government, but I will pay as a reverse charge because my supplier is unregistered in GST. That is why it is coming in column number 7 here. Okay, total expenditure on fuel and power, rupees 30. Fuel and power, I already explained that that is non-GST supply. But for the purpose of definition of exempt supply, it is included in it. And as I already said, that all petrol pump dealers and diesel suppliers, their majority of them are registered in GST. That is why this 30 will come here and 30 will come in the exempt supply tab. Then expenditure on freight. Let's say I paid payment of road freight or any other kind of freight. Let's say some of it I will pay tax under reverse charge, some of it I will pay tax under forward charge. That is irrelevant. What I have to see is whether my supplier is registered or unregistered. That is, transporter is registered or unregistered. Let's say 5 lakh is coming from unregistered and 5 lakh is coming from registered. Answer is simple. Put 10 here, 5 in this taxable category, 5 putting in the exempted category, because either it will be taxable or 5 will be exempted coming from an unregistered person, assuming that no tax was payable in that particular regard, or it is coming from an unregistered person. Okay. Total employee cost, salary 17 lakhs. Very important. It is part of my total 2,50,000 rupees, and total salary 17 lakhs. But you will realize salary is not coming anywhere in this table. It will not form part of my total expenditure also. So I will not put salary as part of my total expenditure, and that is why you see 250 here, but 228 here. So 17 I have not included. Plus I might have included certain things also. Total interest paid. Now interest under GST is exempted. So that's very important to understand. Interest is leviable to tax under GST, but it is exempted. So out of 25, 15 from the banks and 10 to individual unsecured loans. So 25 is coming here, 15 from the bank coming from registered, and 15 coming from unregistered. Then last, depreciation, it will not come anywhere. that is why you will see 17 salary and 5 depreciation. 22 is not forming part, and that is why 250 is my total debit side, but I only consider 228 here. Okay. Next is I have purchased, let's say, land worth of 100 lakhs and motor vehicle worth of 25 lakhs. Only 25 lakhs will come here as motor vehicle 25 lakhs. I might not have claimed any credit of motor vehicle, but still it will come as a detail from my registered supplier 25 lakhs here. And whatever total comes here, this red line which you see on the last, this will go in clause 44. Rest everything else is part of my working paper. So it is just an illustration. How are we going to punch information in clause 44? One may look at it from a different perspective, but that's the easier way to put it. Okay. Before we come to question and answer session, I will take some of the other clauses in clause 3CD, in 3CD, which are from a GST perspective, and some precautions which are to be taken care of. We'll cover them in next 5 to 10 minutes, and then we'll do some question answers in this particular regard. Before I come to this, one on a lighter side, whatever you are going to do today is going to help one more person. And who is that one more person? Is the GST consultant who will file GST annual return along with reconciliation statement. So we have a reconciliation statement under GST, which we file on a year-to-year basis by 31st of December. Let's say we will file for financial year 21-22. There is a table number 14 there, where the details of input tax credit claim and details of it expense wise is to be given. This table was always optional ever since this annual return has come. In fact, it is today also it is optional. But still, now that you will do all that exercise for clause 44, you will make life of the GST consultant easy. And now I see a lot of people punching details in table number 44 because of this clause, table number 14 because of this clause 44. Anyways, other clauses under GST, which are other clauses in the 3CD, which are important. We have clause 14, which talks about deviation from method of valuation prescribed under section 145A. 145A basically talks about that how are your taxation, which is part of the total cost, how are you reporting that, and only amount of tax which you have incurred, actually that is available as an expense. Now what happens is, how are you going to doing your accounting is very important. If somebody is doing accounting on an inclusive method basis, where along with the amount of value of goods or services or an expense, if they book the amount of tax also, then 145A says that whatever tax you collect, and to the extent of whatever tax you actually pay, benefit of that is available. Now, because we don't do accounting in that way, we do an exclusive basis of accounting. Technically, under clause 14B of 3CD, for 145A adjustment, one is required to actually punch the details of what is the amount of increase in purchase cost or inclusion of GST on all the purchases. That is all the amount of inward supplies on which tax is payable. I have to, that kind of basically decreases my profit if I make it part of my profit and loss account. Similarly, whatever taxes which I have collected on my sales and I have not made it part of my profit and loss account, if I start doing that, it is going to increase my profit. So at one side, I am decreasing my profit to the extent of tax which I paid on my purchases and other expenses. On the other side, I have to increase the amount of my profit to the extent of whatever tax I have collected on my sales. Vis-a-vis, again, when I will pay my GST on the amount of taxes, that tax which I have collected on the sales and I am going to pay to the government, that when I will actually pay it, when I collect it, it increases my profit. When I actually pay to the government, it decreases my profit. And again, when I claim credit of whatever tax I've paid on my purchases, that again increases my profit. So kind of you look at it's a revenue neutral exercise. At one end, when the same one leg of the transaction increases my profit, the another leg of the transaction decreases my profit. Only when it's that this table 14b talks about quantification of it. Am I quantifying it properly? So at some places, generally what I understand, we do not quantify it, we put a disclosure note. But on what actually clause 14b requires is that you have to really quantify it. When you link it with 43b, 43b says that if that accounting would have been followed, if the amount of tax which has actually not been paid till the date of filing of the return, then the benefit of that is not available. So we have clause 26 regarding section 43b reporting, and 43b reporting says that if that inclusive method of accounting would have been followed, then to the amount of taxes which have still remained unpaid, that would actually will be disallowed and become part of your profit. And once that actual payment would be done in the subsequent years, you can again reclaim the benefit of it by claiming a deduction in that particular year. Now, our ICI guidance note says that in respect of clause 26, you have to make the reporting in respect of all those taxes and along with the date which have actually been paid before filing of the return. So that is why all the outstanding taxes which are there in our books of account as of 31st of March 2022, we have to make punch the details of it of when the actual payment has been made in respect in clause 26 along with the dates we are supposed to punch that. It talks about all indirect taxes, in fact not indirect taxes, other taxes also, and that is why one is required to punch details of GST, VAT, service tax. In today's context we have GST, so along with other taxes the GST also needs to be punched here. Then we have clause 27b, which talks about reporting of prior period. All of us know our AS5 says that due to error of emission, if you have not recorded certain income expenditure in the previous year, and if you identify them today due to error and omission, that becomes prior period income or prior period expense. Under income tax, because we follow the concept of matching in our accounting policies, that is why prior period expense is not allowed as an expense. It is not a deductible expense. How it is relevant in GST? The reporting of block credit and identification of block credit is very important. Sometimes we claim some credit. Let's say I've claimed some credit on purchase of a motor vehicle. After 2 years, I realized that credit was not available. Today, I realize the auditor tells me that the credit cannot be claimed. I reverse the credit. Now, when I reverse the credit, I have to charge that to my profit and loss account. The problem is when I will go and charge that to my profit and loss account, it becomes a case of prior period expense because it was an error or omission in that particular year which had been identified today, and that is why it will require reporting in clause 27b. Because it will require reporting clause 27b as a prior period expense, it will not be allowed as an expenditure under income tax. That is why when you do the audit or whenever somebody files GST returns, it is very important that you identify block credits in that particular year only. Do not give a spillover effect. Do not basically take it to the annual return, because once you have finalized your books of account, once the balance sheet is signed, once the tax audit report is filed, after that, whatever in respect of that particular financial year is found for as a reversal of input tax credit, that can be a case of prior period expense under income tax, and income tax authorities can go ahead and say it will not be allowed as an expenditure. So we also reverse certain credit in respect of exempt supplies. Sometimes we don't do that in that particular year. We take it to the next year because there is a time limit up to September we can do that. In fact, that provisioning of it should be done in the previous year only. If you do not do that provisioning, again it may lead to a case of prior period expenses. Last, some GST related precautions. Why am I saying that as an income tax auditor you have to do it? Because you are discharging an attestation function. In fact, whenever an audit is happening under the provision of Income Tax Act 44AB, you are expressing your opinion on the correctness of the books of account. That is why the GST compliance in terms of whether that assessee has done or not done, you under the provision of Income Tax Act, because you're doing the auditing function and you're expressing the opinion on books of account, you have to also ensure that you look at it from a holistic perspective, whether assessee has complied with the provisions of GST or not. So one thing, GSTR 283B matching is very important. Whatever credit that assessee has claimed, whether that is appearing in GSTR 2A or not, and that is why, just like when we do our income tax audit, we take copy of Form 26AS. In a similar manner, we should ask for copy of GSTR 2A, and we should tell the assessee to give us a reconciliation of whatever credits are appearing in my GSTR 2A, along with the credit which I have claimed in my GST returns, and find out the reason for unreconciliation. Apply our mind whether that unreconciliation is genuine, whether that is can be claimed further. If it cannot be claimed further, tell the assessee to reverse that. Otherwise, that should go as a note from the auditor's perspective. Second, there are a lot of expenses on which assessee has to discharge tax as a taxable person to the government, to which we call as reverse charge supplies. So these heads of account are very important whenever you do a ledger scrutiny at the time of finalizing the books. Like for example, director's remuneration, wherever director is not an employee of the company, any fees which is being paid to the government which is beyond 5,000 rupees and which is not for a registration under the provisions of any act. So any fees, mind you, I'm using the word fees but not tax. Whatever fees is being paid to the government beyond 5,000 rupees, it may attract reverse charge. Payment for motor vehicle hiring services, that may attract reverse charge. Payment to any lawyer, arbitral tribunal, that attracts reverse charge. Going forward, it will be for residential building also. Foreign currency payments which are being made for import of services, it attracts reverse charge. All of these things are regular head of expenses. When you look at income tax provision, TDS compliances, payment, non-payments, you have to also look at that whether GST provisioning has been done, GST payment has been done. If not, tell the assessee to make payment along with payment of interest. That's one of the important things that needs to be done. Where you're doing audit, or you're filing doing income tax audit under the for a assessee having a multiple GST numbers, then it is very important that turnover which you're punching in the books of account, it should match with multiple GST returns in different states. And that's where reconciliation of the turnover state-wise with the total turnover under income tax is very important. So that is one activity that needs to be taken care of. Second thing which I think probably majority of us miss and which should not be missed is reconciliation of closing balances of input tax credit ledger, my output liability ledger, and my cash ledger in my books of account with the ledgers which are there in my GST portal. So all of us know we have three ledgers on GST portal: cash, credit, liability ledger. Those similar types of ledger should be maintained in the books of account. It should not be only one ledger but three separate ledgers for three separate taxes. That makes it 9 ledgers, and the reconciliation of those 9 ledgers will be done with the portal ledgers, which is one of the very important exercise to ensure the amount of my liability and asset is neither underreported nor overreported. A last thing which we have to take care of, all of us do debtors aging. It is very important to do creditors aging, because if payment is not made within 180 days to the government, to the supplier, then in that case I have to reverse my GST input credit. So my books of account should not have a fictitious asset. If I have not made payment to the supplier within 180 days of the amount of service or goods along with tax, then I have to proportionally reverse the amount of my credit. And that is why once I reverse that amount of credit, my asset amount should reverse. It should go down and it should become part of my liability side. Then I should also look at that any interest which has not been paid to the non-compliance, whether appropriate provisioning has been done by the assessee in his books of account. Why it is important? Because if I have to make payment of interest in the subsequent years pertaining to previous years, then in this year I can claim the benefit of it as an expense of this year. But if I make payment in the subsequent years, then it may become a prior period expense, and that benefit of that interest as an expense may not be available to me in that particular regard. So I think with this we can now come to an end to my monologue. If there are any questions, I'm very happy to take. But before I end, I generally, again, just like the manner I start, I also like to end on that note only. All of this, one would make me feel that it's like too much of information and too many things to be done. From one side, all those people who do not do tax audit, who look at as chartered accountants who are very busy in the month of September, they see to it that September is month of this for us. What you see on your screens, like we do certain numbering, we do certain filing, and that's what we earn out of it. However, we know what it looks like, and the person who's sitting on the right hand side, we realize that our life in the month of September, at least 70 to 80% of it is in the office only, and not our life, but our office staff life also. Our ICI says it looks there is a call for a balance from both the sides. That perspective is also incorrect. This approach is also incorrect. We should enjoy the whole process rather than looking at it as an unpleasant consequence. Leave it for the assessee to see whether if he really wants to be compliant, he's coming to us on time or not. So with this background, I would like to thank all of you for giving a patient hearing. If there are any questions, I'll be very happy to take those questions. Thank you again to CA Sansaar family for giving me this wonderful opportunity to share my views on this topic. Back to you, Stuti ji.
Thank you very much, Yash ji, for such a wonderful deliberation. And you rightly said, no need to take tension, because I was seeing 2 3 messages was there for the date extension. Why every time we chartered accountant are asking for the date extension? Why? Where are the assesses? Why you people are taking loads of tension? Let them do some penalty if they are not coming on the time. Don't take, please, again I am saying, don't take so much stress. So that we will discuss, and I think you have got all the questions, but let me take one by one. So please also brief whether it's covered or not. First is from the Sunil Agarwal ji.
How to disclose HSD purchases for manufacturing and diesel purchase of vehicle owned by company? Yeah, it will come as a exempted supply from a registered person. Column number 3.
Okay. And then I think you have
How to
covered this.
disclose traveling expenses incurred by staff and conveyance charges reimbursed to the staff? Again, because they're given to the staff and the invoices are not in your name, I don't think it will come anywhere to you. It is part of the payment to employees.
Okay. Next
In
is
column
engineer.
3, do we need to include capital expenditure and prepaid expenses? Yes, you will have to include them. If they are exempted in nature, you will have to include capital expenditure also.
Okay. And again, I think
In case of manufacturing company, whether figure of purchase is required to be given or raw material consumed. Purchase is required to be given, not raw material consumed.
okay. Next is from Pankaj Jain ji.
In construction industry at year end, many provisions on base of running project, but vendor wise details not available. What treatment is to be done in clause 44? Well, again, Pankajji, again, as I already said, because it is a mandate coming in the 3CD form, one would have to comply. If not, then you can go ahead and give a disclosure that assessee has not maintained the record. Debit note raised to vendor and expense credited, whether it should be reported or not. Yes, it should be. It will be reported. Why it will not be? It will be reported. Considering para 82.3 of GNL, we are not proposing to include payroll cost, salary, bonus, etc. in column 3. 7 is correct. Yeah, absolutely right. Because ICA said this and it's a guidance note on me as a practicing chartered accountant. I will follow that and I will not include that in my clause 44 reporting. Whether or not opening stock, salaries to staff, salary and interest to partners can be considered. No, all of them are not required to be reported. If we exclude provisions in current year, then how will we monitor in next year at the time of payment? Generally, payout of provision is directly made from opening balance. Yes, that's an absolutely valid point. But because it specifically talks about expenditure, I don't think it is required to be done. It's a separate reconciliation which you have to maintain. If you would like to add them, as I said, give a disclosure. How have you calculated total expenditure? Tell them that I've included provisions also, and then give the reporting. Purchases are also expenses. Yes, they are also expenditure. They are revenue expenditure. What will be in case of GTA? GTA
Next
registered not
query is there. Huh.
in GTA. Most of the expenses are from URB. Whether it will create problem for assessee and come. No. So frankly, as I said, it will depend on the industry. In case of GTA, there can be a strong case to say that they purchase their all the inward supplies from an unregistered person because you write industry code at the starting of the 3CD, so that will be helpful. So I don't think it will call for a scrutiny. What about electricity expenses and water expenses? How client can ensure whether those entities are registered? Electricity generally it comes from electricity distribution entities. In my understanding, 99% of them are registered in GST. Water again, it is coming from a government entity, it will be registered. If a tanker or anything of that sort is coming from a private entity, then probably you will have an invoice through which you'll be able to identify that. Sorry, I have two doubts. How to get information of assessees, composition dealer or professionals? So your supplier is composition or not, you can find that on GST portal. That you can easily do. Where you punch the GST details without logging in, you can find that. So that's one way of looking at it. Second, you take an MRL from the assessee. I think that would be the better case. Tell the assessee to give you a management representation letter. What are the supplies from a composition person or not?
Okay. So I think we have covered most of the this one queries. One, two queries are there. Let me take. Hmm.
Ineligible ITC to be clubbed with expense for the purpose of reporting as well. Yes, you have to include that. Good question. You will include that.
Yes. Otherwise, other messages are beautifully, as everybody knows, GST always do his best. So my sincere thanks to GST. And if we received the PPT, then you can download it
I
from
will
the
share
CA
the
Sansaar
PPT.
YouTube channel. GST will send it out because कई बार speakers नहीं भेजते, तो we never force them. तो अगर मिल गई तो definitely we will put it into the CA Sansaar YouTube this one Telegram channel. आप वहाँ से download कर सकते हो. तो once again, my sincere thanks to ESD. And after
Right.
30th September, we'll again ask him to for some other webinar on the GST. And till then, if you have further any query, then you can message us. We'll discuss. अगर जरूरत होगी, तो we'll ask TSD for more time and don't wait for the tax audit extension. Try to do it. अभी भी काफी टाइम है, 14-15 दिन है हमारे पास, तो that we can do it. Don't wait for the accountant because most of the people wait for the accountants कि accountants नहीं आए, accountants नहीं आए. तो never do it. आप please complete करिए and don't take lots of tension. Enjoy mind से काम करिए कि yes it's our time. तो because काफी टेंशन से बीच में कुछ मिस हैपनिंग्स भी हुई हैं, तो प्लीज इट्स माय हम्बल रिक्वेस्ट टू ऑल ऑफ यू, डोंट टेक लॉट्स ऑफ प्रेशर, डोंट टेक लॉट्स ऑफ टेंशन. अगर ज्यादा किसी के पास काम है तो आई विल सेंड लॉट्स ऑफ सीएस हु आर लुकिंग फॉर द वर्क. So it's a joke apart. So thank you very much. Thanks, GST. Thank you very much.
Thank you, sir. Thank you so much.
Thanks.